Hey guys, Omkar here for Simple Snippets. In previous tutorial, we have learned journal. Now we know that any business transaction which is routed through accounts is firstly recorded in journal. In this tutorial, we are going to look subsidiary books and cash book. So here we start. In business, major transactions are generally related to purchase, sales and cash. Hence, it would be convenient to have separate books for these activities. That is where journal book, a book of prime entry, is divided among major activities. Such divided books are known as subsidiary books. So, record all transactions in journal, it would be difficult to classify the transactions of purchases, sales and cash. And in business, it is very much important to generate reports on purchases, sales, cash differently because these are major transactions of the business. So, to curb over this, the journal book is divided among various subsidiary books, commonly known as subsidiary books only. It is very important to know that these subsidiary books are journal only. Following are the main subsidiary books used in the business. Now in this lecture, cash book we are going to focus. So that's I'm not explaining right now. Second is purchase book. Purchases book is the book in which all purchases are recorded. Purchase return books, all purchase returns are recorded. In sales book, all sales are recorded. Credit sales, cash sales, all sales are recorded in sales book. In sales return books, all types of sales return are recorded. Bills receivable books, bills receivable are recorded. In bills payable book, bills payable are recorded. And in journal proper, remaining any other transactions which are not covered by these first 7 books are recorded. So here we start with first one, cash book. Now what is cash book? Cash book is a book in which receipts and payments of money is recorded. Now there are 3 types of cash book. One is single column. Single column cash book is a cash book in which only cash column is there and receipt and payment of cash is only recorded in this single column cash book. In double column cash book, generally there is cash plus discount column. So discount here means discount received and discount paid both. In triple columnar cash book, cash plus discount plus bank column is there, and in this triple columnar cash book, all the cash receipts, cash payments, discount received, discount payments and bank receipts and bank payments are recorded. So if we do an example on triple columnar cash book, we can solve any example of double column and single column cash book. So let's take an example of triple columnar cash book. Before taking an example, we would first see how cash book look like. So these are the columns in triple columnar cash book. This side is debit side, left hand side, and right hand side is credit side, which is divided by these double lines marked here with yellow. First column is date column, second is for particulars, third is for ledger folio, then discount, cash and bank. Similarly, credit side also have the same columns. Here we go. Date, particulars, ledger folio, discount. Here discount is discount received, cash and bank. So if one can solve a question of journal, it is easy to solve question of cash book because we have already know the 3 golden rules of accounting and how transactions are recorded in journal. So only here we need to deal with the format of cash book. Here is one technique in which we can solve the question easily. Now let's remember the rule for real account because cash is real account. So real account rule says debit what comes in, credit what goes out. So here in this debit side, we are going to record all the transactions which increase cash and bank balance, and here in credit we are going to record all those transactions which reduce cash and bank balance because credit what goes out. It's so simple. So let's start with an example. Enter the following transactions in a cash book with 3 columns, that is discount, cash and bank, in the books of Omkar for the month of June 2017. So first we would write cash book of Messrs. Omkar. Let me remind you one thing, that this cash book is journal only So if we record transactions here, it is assumed that transactions are recorded in journal also. So there is no need to record the transaction in journal in the way which we have learnt in previous tutorial. Now on 1st June, cash in hand rupees 8,000 and bank rupees 10,000. We are going to remember one golden rule in this whole example, that all cash which is there with us and increases our cash and bank balance, we are going to write those in left hand side, and all which reduces we are going to write down in right hand side. We have already discussed the logic of it. So here we write 2017 on both the sides, June 1st. It is balance as on 1st June. So we would write to balance brought down. Cash is of 8,000 and bank balance is of 10,000. On 2nd June, sold goods to Swami and Company rupees 6,000 and received a check of rupees 2,000 as part payment. So sold goods to Swami and Company of rupees 6,000. Here the entry would be Swami account debit to sales account because it is credit sales, and in this entry cash account is not getting altered, so this transaction of 6,000 will not appear in cash book. And next transaction is received a check of rupees 2,000 as part payment. Yes, now here the check is received, so it would increase our bank balance by 2,000, so we would write it in the debit of cash book. So on June 2nd, we would write to Swami and Company in bank column 2000. Here another view can be taken as sold goods to Swami and Company rupees 6,000 and received a check of 2,000. So one may say that out of this 6,000, 2,000 is part payment, so actual credit sale is of 4,000. So in that case, we would record this 2,000 as cash sales and we would write here not Swami account but sales account. So both ways are correct. You can follow any one of them. But if you follow the first one, then don't forget to write the assumption that all sales are assumed to be credit sales. On 3rd June, purchased goods from Patel rupees 8,000 less trade discount 2% and paid the amount by issue of a check. Here goods are purchased from Patel and amount is paid by issue of check. So it is cash purchases. The amount would be 8,000 minus 2% of 8,000 and it would reduce our bank balance because it is issued through check. So any transaction which reduces the bank balance is written in the right side of cash book in bank column. So on June 3rd, we would write buy purchases and amount would be 7840. On 5th June, transferred rupees 5,000 from private banking account to business bank account. Here private banking account is nothing but proprietor's account, which is Omkar in this case. So 5,000 is considered to be a capital which is introduced in a business. So here our journal entry would be cash account debit to capital account. This is increasing our balance of bank. So in the debit of cash book to capital account 5,000. On 10th June, issued a check for rupees 3,000 to Furniture Mart for the furniture purchased for the last month in full settlement of rupees 3,200. Here there are two transactions. First is furniture purchased for the last month. So when furniture is purchased, it is purchased on credit. We would have passed the journal entry debit what comes in to credit the giver, that is furniture account debit to Furniture Mart account of rupees 3,200. Here in this month on 10th June, we are issuing check for the full settlement of 3,200 and this check of 3,000 would reduce our bank balance. So we would write this transaction in the credit of cash book. So on 10th of June, we would write buy Furniture Mart. Furniture Mart is receiver, Furniture Mart account debit to cash account, that is bank account in this case. We are giving 3,000 in spite of 3,200. So 200 is saved, which is discount received for us. In totality, the journal entry of this would be by Furniture Mart account debit to discount received account 200 to bank account 3,000. Next, On 12th June, withdrew for personal use from bank rupees 8,000. So it is nothing but drawing and reduces the bank balance. So in credit on 12th June, by drawings account 8,000. On 14th June, issued a check to petty cashier for rupees 2,000. This is very important transactions, so please listen to it carefully. Here, check is issued to petty cashier. Cash is not going out of the business anywhere, but petty cashier would receive cash from bank and bank balance would get reduced. So this transaction of 2000 on 14th June will appear on the both sides of the cash book. Here it is how. On 14th, we would first say by cash account because petty cashier will receive cash. Here in ledger folio reference column, we would write C. This is contra, and in bank column, bank balance is getting reduced. We would write 2000. Here you can alternatively debit petty cashier's account also. On 14th of June, bank balance is getting reduced, so we would write here to bank account, and in cash column 2000 is coming into the business, so we would write 2000 in cash column. Here again we would write C. Now what is this significance of C? C refers to contra entry. In ledger folio column, the reference of ledger is given, but here this ledger reference will not have effect because it is crediting in one side and having debit effect in another side. So that is why we write C here in case any transaction having two effects and appearing on both sides of cash book. On 15th June, withdrew for office use rupees 4,000. So here again the same entry would be there by cash account. Cash is coming into the business. Debit what comes in rupees 4,000. Here we would write C. On 15th of June, bank balance is getting reduced to bank account. Credit what goes out. C. Cash is coming in. So in cash column 4,000. On 16th of June, Swami and Company informed that they paid directly into our bank account the remaining balance amounting to rupees 4,000. So here our bank balance would get increased because there is direct payment from Swami and Company. So we would record this in debit of cash book. So on 16th to Swami and Company, credit the giver in bank column 4,000 because he is paying directly into our bank account. On 19th, bank collected dividend and credited to our account rupees 1,400. Here our bank balance would increase, hence in debit of cash book we would say to dividend received account 1,400. On 28th of June, paid insurance premium for goods rupees 3,000 by check. Insurance premium is paid by check, so bank balance would get reduced here. On 28th of June, by insurance premium account 3,000. On 20th of June, cash sales 8,000. We are receiving cash for sales which we have done. On 20th June, it would increase our cash balance. So to sales account, here in cash column we would write 8,000. On 25th of June, paid salaries by check rupees 800. Salary is expense for us, so nominal account rule says debit all expenses. We are debiting salaries account and the payment is by check, so that's why it would come in the credit side of cash book rupees 800. Last transaction is on 30th of June, purchased government securities rupees 900. So here again investments are real account. Rule of real account says debit what comes in, so we are debiting investments and credit what goes out. Bank balance is getting reduced, so we would write 900 in the credit side of cash book. So here we have covered all the transaction. Now it is time to have totals in both the sides. Now while taking the totals, just below this white line, you have to write the totals of all the columns. So here we go, 22,000, 22,400, 200, 0 and 29,540. Now here 200, first we would see discount column against discount column. So 200 is higher, we would write 200 on the both sides. Now to balance the ledger, we would write here 200 so that our totals will match, and this second effect would directly go to profit and loss account. Logic of this entry would be, as per nominal account rule, debit all expenses and losses, credit all incomes and gains. So discount received is income for us, so we are giving its effect in profit and loss account. It is the transaction of final accounts, so this concept will get more clear when we will solve example on final accounts. Next is cash, 22,000, 22,000. here the balance will come on the opposite side because it is closing balance. On 30th June, we would write it as buy balance carried down. Please note that don't assume that this is in credit of cash book, so it is cash going out. It is just a closing balance which we have written, and closing balance always appears on the opposite side. Here let's close the last column, which is bank column. 29,540 on both the sides, 29,540. Here we can see that 29,540 we have paid in all, but we were having bank balance of 22,400 only. So this difference, that is difference of 7,140 rupees, is nothing but loan which we have taken, which is short term loan. It is known as bank overdraft. So it is two balance carried down, we would write. So on July 1st, here it would appear buy balance brought down bank overdraft of rupees 7,140, and on July 1st, here cash balance would appear as two balance brought down in cash column 22,000. So that's all guys for this tutorial. If you like the video, please share it and don't forget to subscribe to our channel. Peace.